friends, I'm going to be talking about the hammer candlestick pattern. It's a very, very powerful pattern and it will help you take super profitable entries, especially when you're trying to go long. Now, before I delve into the topic, I want to tell you something about my course. I have a paid premium community offering a, a price action trading course with basic and advanced concepts. And I have a trading app which you can view on your Android or Apple cells. I have a website where you can watch recorded lectures, which are around 8 hours plus. And then you have a weekly call where there is doubt resolution. And this is not for 3 months or 6 months like other courses, but this is for a lifetime. Lifetime means as long as I'm around to offer service, as long as I can conduct business, as long as I'm alive. I will mentor you to the best of my ability, and you get the chance to collaborate with like minded traders, helping you develop your edge in the market. Now, you must have gone to school, you must have gone to college, right? And then some people do post graduation. Nowadays, most people either do engineering or they will do a MBA or a master's in computer applications or whatever, and some even go on to PhD. You pay money for it, you spend time learning. If you're not willing to pay the money and invest in yourself and in your learning, you are not going to get a job in the market. Similarly, you're not going to succeed here in the stock market. It's all about investing in yourself, spending the time learning, then implementing, and then getting into the market, knowing what's happening, and then over a period of time, you become consistently profitable, making this a beautiful passive source of income. And there is no end to how much you can make. I'm not guaranteeing you that you will make 20%, 50, 80, 90% because we are not allowed to guarantee. This is a SEBI rule and nobody can guarantee. My trading accuracy is not your trading accuracy. My profitability is not your profitability. What I can guarantee is that I'll put my heart and soul into teaching you so that you are able to basically understand. First, you learn the alphabets, you finish school, then you went to college, you learned some more stuff, algebra, geometry, higher level stuff, right? And then you did your engineering or your graduation, and then you did your MBA. Not only did you pay separately for it, the learning became more advanced and you got more value out of it, and you had to pay higher fees for it. Otherwise, why would you pay the fees? You know that when you are going to learn at a higher level, you'll stand out in the crowd. That means you'll make a mark for yourself. So please invest in your learning because without investing, if you're just going to be watching YouTube videos, even including mine, sure, I'm offering value. But until you have a step by step guide, a mentorship, and collaboration with like minded traders, you are not going to be consistently profitable in the stock market. Okay, I have said my piece. My links will be there in the description or in the YouTube description, where you can either attend my webinar or directly pay for my course and go through the recorded videos and then ask your doubts. Now let's get to. I have shortlisted a few stocks now, as you see on the screen. Let's look at Sharda Cropchem, and I'm on the daily chart. And if you see here, I've made these drawings. This is what a hammer candle looks like. Bookish hammer candle. This is how a hammer candle can look like, or it can look like this, or it can look like this, which is like a pure doji, and this is just going to be a little longer, right? This has to be a little longer than the width. So you have your high and your low and your open and your close. So if you look here, the price has been going down in Sharda Cropchem. You see price trying to retrace but then falls back here. So you have a lower high, lower low, again a lower high, lower low. Again, now price is basically, you see break of structure happening here and price going, and price is even below the 9 EMA. Forget the other averages, the major averages. And it's been falling for quite a while. If you see here, price has been falling continuously from the 8th of Jan with some respite in between, but they were only retracements to be sold at. So people were selling here at the highs and the price come down. But finally, the bears are all exhausted. All the selling that could have taken place has taken place, and I'm going to zoom in on the chart So you will be better able to appreciate. Can you see here? So you have you have your opening at the high, and then you try to went to a low 479 but closed up to 495. So you do you see the wick here? The wick here basically is buying pressure. Sellers bought it down, but buyers continue to buy, and they are willing to buy up to this rate. And the bear candle has closed here. Now this doesn't exactly look like a hammer, but hammer it is. Like I showed you, different shapes and sizes. You can, even make it thicker. You can make this shorter. All sorts of because what you see basically, uh, the bookish patterns rarely appear. They do appear, but they are few and far between, right? So if you see here, this is also a hammer. Not exactly the conventional hammer, but it's a hammer nonetheless. That's why if you see here, let me reset the chart so that you can see the drawings that I made here for you guys. Can you see here? Different types of hammer. So what this wick specifies is basically buying pressure. Bears try to bring it down, and here the bulls fought back, and you see this here. Now, this can be a red candle, this can be a green candle, meaning a bull or bear candle, doesn't matter. But now I'm going to zoom in so that you can see it. So you had buying pressure here, and then if you see here, this is like a very thin doji, just like the one I drew here specifically, so that I could point out this. You got one indication here, right? And had you chosen, you could have gone high. You could have gone long above the high here. You wouldn't have gotten executed here, but you would have gotten executed here when this candle ran through, right? So, or you could have gotten above the high here, and you would have gotten in your long trade would have executed your limit order on 4th March. So, a hammer candle basically when it comes at the bottom at the end of at the end of a downturn, and finally you feel that yes, now this is it. We see buying pressure, and suppose you didn't buy here because you thought it's a red candle. Let me wait for additional confirmation. Again, you've got another one. Bulls and bears are fighting here. They're fighting in a manner that you have you still have 1.2%, right? So, but see the variation. If you see here, the open, high, low closes all over the place, left, right, up, down. If you look at the values, right, the open, the high, the low, and the close. If you look at the values and you know what you're doing, so this again basically just confirms. This just confirmed what this indicated. You can put in a buy limit here and a SL somewhere below here based on your trading strategy, your risk profile, and how you want to trade, and you are in the game, and you are already in the money. By in the money, I don't mean options, okay? So by in the money meaning you're making money. Say, so for example, I just made a stop loss here, a imaginary stop loss, okay? Just a second. You have your stop loss somewhere here, and you entered somewhere above the high here, right? And you're making money. Your stop loss hasn't hit yet. So this hammer candle has helped you gain an entry. I will not go into what this is indicating, because otherwise it's going to get a very long video on how to manage your trade. I'm just talking about the hammer candle and how it's allowed you to get an entry because it has come at the end of the trend, and you got multiple indicators. You got it twice. One, two, you entered here, you got filled in, you are in the market, and the price is going upwards. Let's go to another chart, right? Now, because there are 2,600 stocks, I just went through a few and I found these out and I added it to my swing active trade stocks just for the purpose of this. If you go and find, you will find many examples, and this is a very nice hammer candle, whether it's single or double or multiple. is going to help you take profitable long trend entries, but it has to be taken at an appropriate place, which is at the bottom of a downtrend. If you see a hammer candle somewhere in the middle of a trend, like it can come anywhere in the middle of a trend, then uh, you don't enter it. You have to understand what the hammer candle is. It's basically buying pressure, where at the end of a downtrend, that is when it's going to give you profit. Don't just go about entering the hammer candle because you said Neeraj said so. So he said hammer candle, just going long. No, no. Please listen to what I'm saying. Price is in a downtrend. In fact, there is a gap down here. We are on the daily chart. We are on a different chart on Deepak Nitrate. I've already shown you Sharda Crop Chem. And if you see here, if you look at the chart here, you have a nice hammer candle. I'm going to zoom in so that the viewers can see. Nice hammer candle. Again, you have a doji. You have a doji here, but again, if you see, there is a bottom wick here as well. So they are fighting amongst themselves. But the bulls have won here, although it's a red candle, doesn't matter because it's the end of a downtrend and you go in long above the high here, stop loss somewhere here, and you are in the game. You are making profits because you got filled in here on this day. The spike entered, then it closed here, but you're in the money, you're making money, candles are green, and everybody loves the color of money. And your hammer candles have given you good entry because they are at an appropriate place. At the end of a downtrend, you're below all the moving averages. So keep your position size accordingly because this isn't a retracement to mean. We are not above the 200 EMA, we are above all moving averages. So please keep your position size small because these EMAs are going to act as dynamic resistance. They have not acted here, but they very well could, and price could rebound. So you need to be very, very strict with your risk management here because you are we don't know see this price, this candle has to break the swing high here, then we are going to say change of character, then it's to break it here, then it's to break it here, then it's to go above all the 200 EMAs. Once it goes here, then we know that the price is in a long time uptrend. Right now the price is in a long time downtrend. Can you see here? It went up but didn't matter, it went down. So there is a chance to make money. But if you wait till the price goes above 200 EMA, and most stocks are below 200 EMA now with the Nifty in downtrend for the last couple of months, you're going to twiddle your thumbs, meaning you're just going to sit on your backs. What to do now? What to do? What to do? We'll wait till it comes here. And if the price crosses, you would have lost 40, 50, 60%. On the flip side, you have risk because all the EMAs and the long-term trend is downward. So how do you manage? You manage by learning how to trade properly from an effective mentor who knows what he's doing, who trades in the market, who is not just teaching you by looking at YouTube videos, who really knows what he's doing, which is me, right? Anyway, going on to the next one. Text or rail engine, right? I'm going to reset the chart. Don't worry, I'll zoom in. Again, if you see here, you have price tried to go up, came down, went up, going down. So this is your double top pattern or your M pattern, if you will. Different people, different names. Rose by another name is just a speed. So price is in a price was in a downtrend here. Tried to go up, didn't succeed. Tried to go up here again, but 200 EMA is like ready with a stick and hitting it. Can you see the wicks here and the wicks here? And the bulls tried, but the 200 EMA, there's too much of selling pressure here. There is too much of selling pressure here, probably because of smart money orders here at the 200 because they are selling at the 200 EMA, which acts as dynamic resistance. So price has not been able to break through. Now, let us come to, I'm going to zoom the chart. There you have it. I'm just going to keep the chart. Can you see here? This is a hammer candle. Now, people will call it a doji, but as I told you on the first screen, right? It's not going to be textbookish. What you see here, this part, can you see the wick below is more than the wick above? So this is not a doji. It's a doji, but it's also a hammer candle. This is buying pressure. You put in an order above the high, stop loss below the low, with the low of this candle, and then you can tweak it the way you want, and you got filled in here, and you are in the money, making money, making money, making money. I don't know what will happen tomorrow. The price is hit the 20 EMA and has come back. You really don't know what's going to happen tomorrow. For that, you need to dig in deeper, and that's a topic for another YouTube video or for my private mentorship. But the hammer candle has again got you in because it's at the end of a downtrend. You see a nice wick, good stuff, right? And see the volume also. Good juicy volume, almost 2.5 times. The buyers are willing to, the bulls are fighting, and the bulls are winning here. So far, so good, right? Now let's go to another chart, NBCC. Again, I'm on the daily chart, and if you see here, price tried to break through. It did break through, but this was basically very short-lived. And the bears bought it down again, trying the 200 EMM is killing it, and the price is in a downtrend, a clear downtrend on the daily chart. At least from 10th February, all we see is here a few retracement here and there, but you are going down. Boy, are you going down, right? The price was 93 here, and now if you see here, the price came down to 70, and now it's gone up to 81, right? Price has gone up to 80.76, which is what is shown here. Can you see 80.76? Anyway, coming back to our hammer candle. Wow. Everybody loves a hammer, right? So, if you see here, nice hammer candle, and good volumes as well. The volume is 13.65 compared to the 11.3 mil volume, the 20 period volume, the 20-day volume. And you get in over the high here. You got filled here on 4th March. Stop loss below the low. And with a very small stop loss, you are making money. Price is trying to break through the 20 EMA. We don't know what will happen tomorrow, but you are in the money. And with effective trade management strategies, you are going to be able to make money of this hammer candle just on the basis of what I've taught you. You will make money just on the basis of what I've taught you. But remember, there's a difference between being profitable one day and being profitable on a consistent basis over a series of trades. Invest in your learning, invest in yourself, and then you will make money. There is unlimited money to be made. It depends on your learning, what you know, and how much trading capital you have. And if you effectively implement the strategies taught to you and continuously learn, there is no end to the amount of money, but it will not happen overnight. It will not happen in a few months either. This is a journey of a lifetime. Remember, 10 years for SSC, 2 years for HSC, 3 years for graduation, or 4 for engineering, 4 for 3 years for your MCA, 3 or 4 years depending on what you want to do. Your MBA also 2 years full time, or 3 years part time, or 1 year or 14 months full time, 12-hour course or whatever, executive MBA. You have to put in the time. You have to invest in yourself. You have to put in the time and learn, and never stop learning. Now, this isn't as bad as learning software where entire technologies become obsolete, but still you have to learn from your mistakes, from your winning and losing trades, so that you become a consistent, profitable trader and you continuously improve. Now, if you haven't subscribed to my YouTube channel, you're missing out on a lot of free videos, free value that I'm offering, and you are basically missing out on a golden opportunity if you haven't subscribed and have not been watching and making notes for each of my videos. They offer immense value, because value is what I'm here to offer, so that you understand that I can offer you value, and I eventually hope you'll come into my paid mentorship. So thank you for watching. Hit the like button, download my video if you love it, subscribe to my channel if you haven't done so already, and wish you happy trading. I'll see you in the next.